Every year, the rich get richer while most people are buried under income tax, payroll deductions, and hidden fees. It seems unfair, right? How is it that billionaires with fortunes worth billions often pay a fraction of what the average worker does? In this series, we're going to uncover the hidden financial strategies, loopholes, and legal maneuvers that the ultra-wealthy use to minimize taxes. This isn't about breaking the law, it's about understanding a system that's stacked in their favor. From Wall Street to Silicon Valley, these billionaires have mastered the art of making money work for them and avoiding tax traps in the process. Their secrets reveal a startling truth. The tax code isn't designed to be fair, it's designed to be exploitable by the few who understand it. By the end of this series, you'll see why your paycheck is taxed, while billionaires seemingly slip through the cracks. Here's the truth most people don't realize. The tax code isn't broken, it's engineered with loopholes that favor the ultra-wealthy, and billionaires exploit them with precision. One major strategy is capital gains versus ordinary income. While most people pay 20 to 40% on wages, investments like stocks, real estate, and business sales are taxed at much lower rates. That means a billionaire earning $100 million from investments may pay less than a teacher making $100,000 from their salary. Then there are trusts and foundations tools that legally shelter wealth across generations. Assets held in these structures can grow tax-free while still funding influence and philanthropy. Even debt is a weapon. Billionaires borrow against their wealth instead of selling assets, avoiding capital gains taxes entirely. The system isn't unfair by accident, it's a game only the knowledgeable and resourceful can win. Most people think debt is a burden, but for billionaires, it's a tax strategy disguised as borrowing. Instead of selling assets and triggering capital gains taxes, they take out loans against their holdings. Stocks, real estate, or business equity become collateral for cash money they can spend without technically earning it. For example, if a billionaire owns $1 billion in stocks and takes a $100 million loan, that money isn't considered taxable income. The IRS doesn't see it as profit, even though they're effectively using their wealth to fund lifestyles, investments, or new ventures. Meanwhile, interest on these loans can often be deductible, further reducing tax liability. This method turns wealth into a self-sustaining machine. Money borrowed from assets grows assets elsewhere, creating more value while legally dodging massive taxes. The shocking truth: most middle-class workers would never qualify to do this. Debt is a tool that the ultra-wealthy weaponize to stay untouchable. Here's a harsh reality. Your salary is taxed at a much higher rate than a billionaire's investment gains. While ordinary income from wages can face rates up to 37% in the US, capital gains, the profit from selling investments like stocks or real estate, is typically taxed at just 20%, sometimes less. This creates a staggering imbalance. If a billionaire earns $100 million from selling shares, they pay a fraction of what a teacher or engineer makes on a $100,000 salary. Some even avoid paying capital gains taxes by never selling their assets, instead using loans against them for cash flow, effectively living off untaxed wealth. This isn't about cheating, it's about understanding the rules. The tax code rewards investment over labor, which means those who make money from money pay less than those who work for it. The system is structured so that wealth compounds, while the ordinary worker keeps getting taxed more, year after year, decade after decade. Billionaires often appear generous, donating billions to charities, hospitals, and universities. But behind the philanthropy lies a powerful tax strategy. When money is funneled into charitable foundations, it's tax deductible, sometimes immediately, while the assets inside the foundation can grow tax-free over decades. Take the Bill and Melinda Gates Foundation as an example. Bill Gates donated tens of billions, reducing his taxable income dramatically. Meanwhile, the foundation invests the funds, increasing its value, all while advancing causes aligned with his vision. Other families and ultra-wealthy individuals operate similarly, creating a dual benefit: public goodwill and private wealth preservation. This method allows billionaires to support society while simultaneously minimizing estate, income, and capital gains taxes. It's not just giving, it's a strategic tool for maintaining and expanding wealth legally. The lesson: generosity and tax planning are intertwined at the billionaire level. For most people, passing down wealth is simple. You leave your money to your heirs and pay the required estate taxes. For billionaires, it's a multi-layered strategy designed to preserve and grow wealth across generations while minimizing tax liability. They use tools like trusts, family limited partnerships, and gift exemptions to transfer billions without triggering massive taxes. These structures allow heirs to inherit assets like real estate, stocks, and business stakes without the government taking a huge cut. Some trusts even protect money from lawsuits, creditors, or divorce settlements, keeping the family fortune intact for decades. This meticulous planning ensures that wealth doesn't just disappear, it compounds. The ultra-wealthy aren't merely making money, they're engineering legacies, turning each generation into stewards of growing empires. The reality: estate planning at this level is less about passing money and more about controlling financial destiny over centuries. Billionaires don't navigate the tax code alone. Behind every ultra-wealthy individual is a team of specialized lawyers, accountants, and financial advisors whose sole job is to protect and grow their wealth. These professionals design complex structures, trusts, shell companies, offshore accounts, all perfectly legal but nearly impossible for the average person to execute. Every decision, from buying a company to giving a charitable donation, is filtered through this team to minimize tax exposure. They also constantly monitor legislation, anticipating changes, and adjusting strategies in real time. While ordinary taxpayers scramble to file returns annually, billionaires have a year-round defense system dedicated to shielding assets. It's not about cheating, it's about having resources to exploit every legal advantage. The more wealth you have, the more tools you can deploy to make sure your fortune grows untaxed, legally, and efficiently. When you hear headlines about billionaires paying zero taxes, it can feel unfair. But the truth is more nuanced. They aren't breaking the law, they're mastering it. The combination of capital gains, charitable foundations, debt strategies, trusts, and offshore accounts allows them to legally minimize their tax liability, sometimes to near zero. This isn't about greed, it's about financial literacy at a level few can achieve. The average taxpayer doesn't have the resources, advisors, or leverage to structure their wealth in ways that optimize taxation. For billionaires, the system is a tool, a mechanism that rewards knowledge, foresight, and strategy. It's also a mirror. The loopholes and rules they exploit are written by legislators and accountants. Billionaires don't bend the law, they operate within it to protect and expand their fortunes, highlighting the vast gap between ordinary workers and the ultra-wealthy. After uncovering the strategies billionaires use: capital gains, debt, trusts, foundations, and tax havens, one thing is clear. The system is designed to reward wealth, not labor. While ordinary workers are taxed on every paycheck, billionaires leverage knowledge, strategy, and professional teams to legally minimize their contribution. This isn't just about money, it's about power and influence. The ability to grow, protect, and transfer wealth unchecked means the ultra-rich can dictate markets, policy, and even society itself. But there's a lesson here for everyone. Understanding these strategies illuminates the rules of the game. The truth? You may not become a billionaire overnight, but you can learn from their financial tactics, investing wisely, using legal tools, and planning for the long term. Knowledge of the system is the first step to leveling the playing field. Because in the end, it's not about envy, it's about empowerment through understanding. Now that you understand how billionaires legally minimize taxes, it's time to ask yourself, how will you use this knowledge? Understanding the system is the first step to taking control of your financial destiny. Hit like if this video opened your eyes to the hidden strategies of the ultra-wealthy. Subscribe for daily insights on wealth, business tactics, and money strategies the rich don't want you to know. Comment below, which tax strategy surprised you the most and how will it change the way you think about money? Share this video with friends and family. Knowledge of the system is power, and everyone deserves a chance to learn. Remember, the game isn't broken, it's just played differently by those who understand it. The more you know, the smarter your moves.